Hey everyone, welcome back to Corporate Decoder, the place where we break down the confusing language of big business. And today we are diving into a financial report that shows a bank navigating through some interesting times. And let me tell you, there are definitely some numbers here that tell a story. This report for Metropolitan Bank Holding Corp covers a period with a lot happening, and we are going to decode it for you so you can understand exactly where this company stands. Now, before we jump into the meat of this filing, if you appreciate getting clear, easy to understand insights directly from these corporate documents, make sure you are subscribed to the channel and also join our Discord community. We've got a link in the description below to keep the conversation going after the video. Alright, so let us get right into it. Metropolitan Bank Holding Corp, as of the end of 2025, is sitting on assets valued at over $8 billion with loans, making up a huge chunk of that, close to $7 billion. Deposits are also substantial at over $7 billion too, and their stockholders' equity, the value belonging to the owners, is around $743 million. This gives us a snapshot of their scale, but we need to dig deeper to see the health behind these numbers. Now, when we look at how the bank is performing specifically with its loans, there is one number that stands out: a big jump in non-performing loans from about $32 million in 2024 to over $86 million in 2025. This is certainly a red flag, and the report points to a single large commercial real estate multifamily loan relationship as the main reason for this increase. This means a significant loan that is not generating payment income has become a much bigger problem for the bank. In response to this and likely other factors, the bank has increased the money it has set aside for potential loan losses. The allowance for credit losses relative to total loans went up from just over 1% to 1.43%. This is a wise move to cover potential future problems, but that increase in problematic loans is definitely something to watch. On the bright side, the bank looks like it made more money in 2025 compared to 2024. Net income grew by about $4.4 million to just over $71 million. This improvement is mainly thanks to a jump in what they call net interest income, which is the difference between what they earn on loans and investments and what they pay out on deposits, but we will get to that. That key measure of profitability, the net interest margin, also improved, going from 3.53% to 3.88%. This tells us that the bank is earning more on its interest, earning assets compared to what it costs them to fund those assets. And that is a good sign for their core business. However, not everything is up, not interest income, which includes things like fees from services, took a significant hit, dropping by about $12 million. The report says this is mainly because they no longer have that banking as a service revenue, which was quite substantial previously. This shows a shift in their business focus away from certain fee-based services. Now let us talk about where they operate. The bank has 7 banking centers spread across Manhattan, Brooklyn, Lakewood, New Jersey, and Long Island. They also have a loan production office in Miami, Florida, and they are planning to open another banking center in West Palm Beach, Florida in 2026. This shows they are trying to expand their physical presence, particularly in Florida, which is a growing market. Their main focus remains the New York metropolitan area. They are targeting middle market businesses and real estate entrepreneurs with specific financial needs, often overlooked by bigger banks. This relationship-driven approach is their core strategy. When we consider the risks the company highlights, one major point is the volatility of their stock price. They acknowledge that the market price of their common stock can swing quite a bit, which could make it tough for investors to sell their shares when they want or at the price they want. This is common for many companies, but it is a direct risk for shareholders. A significant risk they point to is cybersecurity. They are very concerned about potential failures in their own computer systems and those of their third-party partners, including cyber attacks. This could mess with their ability to do business, reveal confidential information, hurt their reputation, and lead to financial losses. While they say they have not had major incidents, any future breach could be quite damaging. Looking at the structure of the company, it is pretty straightforward. Metropolitan Bank Holding Corp has one main subsidiary, Metropolitan Commercial Bank, the actual bank, and there are no other significant businesses under the bank itself. This means their operations are pretty concentrated within that banking business. From an investor's perspective, the market values their public shares at around $695 million as of mid-2025. This gives us a sense of their overall market capitalization. Now looking at the bigger picture for Metropolitan Bank Holding Corp. The company is clearly focused on its core banking business and growing its relationships in key markets like New York. They've seen growth in net income and their core profit margin. The net interest margin is improving, which is a strong positive. They are also taking prudent steps like increasing their loan loss reserves, which is important given the rise in non-performing loans, especially from that commercial real estate. Loan issue, however, the drop in non-interest income due to exiting certain businesses, and the significant cybersecurity risks they highlight are areas to keep an eye on. Their strategy seems to be about deepening relationships rather than just chasing volume, and that can be a solid long-term play, but it also means they need to manage those risks very carefully. I think the bank has a clear strategy and is focusing on its strengths while trying to mitigate known risks. The increase in non-performing loans is a concern, but the bank has increased its reserves and the core banking operations appear to be performing well. Alright, that is our breakdown of Metropolitan Bank Holding Corp. Latest filing, what do you think about their strategy and these numbers? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate finance. And don't forget to join our Discord linked in the description to keep the conversation going. Thanks for watching, see you next time.